Welcome back to the channel. My name is Steven. I'm a pharmacist. I own 52 units of real estate and I built up a $6 million net worth. So today I want to talk about how my mindset has changed since I've achieved financial freedom, how my perspective has changed since I achieved financial freedom, and why I'm kind of in this weird, awkward pause right now as I kind of reassess everything that I've done until now and kind of what moves I want to make next. So as you can tell from a lot of my videos, I've been very self-reflective and just documenting my journey with you guys so you guys can see what it's really like. But by all objective measures, with a $6 million net worth and a real estate portfolio that cash flows $10,000 a month, pretty much am financially free. And despite that, as you all know, I still work full-time as a pharmacy manager at a hospital. And if you were to take your $6 million portfolio and basically, let's just say I sold it all and $1 million in stocks, $5 million in real estate. If I were to sell my $5 million in real estate, let's say after tax, I'm at $4 million in real estate, $5 million total. If I were to take that and then live off the 4% rule, that's about $200,000 a year that I can live off passively. Right? And by all means, that's enough to replace one pharmacist's salary. Or like if you were to take that, $5 million and, like I said, just throw it in like a high yield savings account, throw it in index funds, throw it in something tax-free, basically you're done, right? You could live a very good life for a long time. And then, obviously I could step away from my W-2 and then focus on other things that I would rather do in my free time, right? Don't get me wrong, I love to work, I love my job, but once you're financially free, you have other options, realistically. You can do what you want when you want, and something about that is very freeing and very nice. So, for me, once I hit it, I will say, I was so focused on the goal of buying a lot of real estate, which I had 90 units at one point. And when I hit 90 units, I said, you know what, I have 90 unstable units, so I ended up selling my mobile home park for a loss because I didn't want to deal with that anymore. And it wasn't for me. And basically, stabilized my apartments, bought my single family home here, my primary residence. And just basically was just okay, I was just so focused on buying, accumulating, improving my mindset, bettering myself. And then all of a sudden you hit your goal, and then once you hit it, honestly, it's a little underwhelming. For the longest time, I'm like, damn, if I could replace my W-2 job, which, $10,000 a month net, it pretty much does replace my W-2 job for the most part. I take home $12,000 for my W-2 right now. But for your average pharmacist, $10,000 a month take home is pretty solid. And, despite that, I have a decent cash reserves. I have a decent stock portfolio, which is pretty liquid. So, once I hit it, I'm just like, it didn't feel as good as I thought. And maybe it's because I'm still working, right? Because if I'm still working, my lifestyle still feels the same. And, nothing has really changed for the most part. So, right now I've been kind of this awkward limbo where I'm just continuing to do what I'm doing and then let my assets compound and grow further. Because right now I can live off my W-2 and then let my real estate income just self-sustain itself. I know there's CapEx, or if I want to save for other deals. So it's just really me trying to restabilize everything because I was just so focused on real estate that I went all in. I neglected, investing in 401ks, max funding my life insurance. My reserve was dipped into, so I'm rebuilding my reserve. And now I bought a primary residence. So, obviously it's harder to save money from my W-2 to cover for that. And, started doing my business on social media and, coaching and mentoring. So, like I said, once I hit it, it's just once you hit the goal, you don't feel any different. And looking back, really the fulfillment was really pushing myself to the limit and being able to look back and not have regrets. In the grind, yes, looking back, I was really stressed. I had highs, I had lows, stressed, anxious, depressed, you name it, tired, low energy, euphoria. I experienced all the above in the past 3 years as I went on my real estate journey. And like I said, now I hit it, I'm just I feel the same. I still go to work. I get bored. I have free time. I could watch sports. I could watch anime. I could watch TV, watch Netflix. I could, I'm still learning and whatnot. And Now I'm just like, I'm not used to having this much downtime, right? So now I'm like starting to refocus on like working out again and getting back in shape. And having a wedding is obviously motivating, and a gym opened up in my community, so it makes it even easier now. There's no excuses, so just focusing on that. So, but it's been weird because like I've just been singularly focused on like building wealth and buying real estate for the past like 3 years, and now I'm like hitting this awkward pause for the past year. I mean, I did buy a primary residence, but it's just kind of like, I feel kind of bored, right? Like I was used to all this excitement of buying real estate and renovating it and dealing with issues and dealing with problems. So looking back, I'm like, I do really enjoy, that process of buying real estate. And even looking back on mobile home park, even though I lost money, like I have no regrets. Like I tried, I failed, I lost money, I learned. And now I know, okay, Steven, don't be stupid and deviate from what you're successful at, which is single family homes in California, single family homes in Alabama, and apartments in Oklahoma. Just do one of those three and you'll be more wealthy than you'll ever need to be. So don't deviate to mobile home parks, RV parks, self-storage, triple net, syndication. Just do what you're continuing to do, right? So, there's that. And why it's kind of like an awkward pause, as I mentioned earlier, is like, interest rates are like high right now, right? Like when I was buying, it was like 4% or less. And now that interest rates are like my primary residence at 6.5%, I mean, it is going down, every quarter, and hopefully, by mid to end of 2025, maybe it's, below 5%. If that's the case, at that point, that's when I can start becoming active again in real estate, because I can, well, first of all, if interest rates are 5%, I'm going to refinance my primary residence to lower it from 6.5% to 5%, save some money. I'm probably going to refinance my 20 unit, which has a 6.5% interest rate. And when I refinance that, I'm probably going to pull out some money out of that deal, because I think I left about close to $100,000 in that deal. But if interest rates drop and the value goes up, then I'm going to pull out the rest, $100,000. And if it makes sense, I might, if interest rates get closer to 4, I might cash out, refinance my 26 unit, because I want to pull out the, $400,000 I put in there. And, I will say a word of caution is when I do cash out refinance, I'm not going to pull out all that I could, right? Let's say it appraises at, let's say $1.5 million, and I can pull out 75% loan to value. Like, doesn't mean I'll do that, because what happens is if you have a bigger loan and, interest rates were to spike up again and your balloon payments due, now you're stuck in a situation, right? Like for me, if my loan is like $300,000, which it is now, and I get called due and I have to refinance and the interest rates are higher, like whatever, I can still survive, because it's worth about $1.5 million. So like what I'm trying to say is, like, even if I were to do a refinance on my 26 unit, which is I think worth about $1.5 million, and I bought for $500,000, put in $400,000 in there, so all in for about $900,000. Like I'm not gonna max out 75% loan to value of 1.5. I would just take out maybe $400,000, so my loan is about $700,000. So it goes from $300,000 loan to $700,000 loan. And I'll take that $400,000, and from there I could buy more real estate, or I could finish paying off my max funded whole life insurance, both those policies, have a reserve, and at this point I could maybe make a principal payment to this house to focus on paying this off faster if I want to, right? If interest rates drop, most likely my single family homes will go up in value, so it might be an opportunity for me to sell one to take that money and pay off this primary residence, so I'll have no expense here. So that's why I've been kind of in this awkward pause, because like between me trying to like restabilize myself financially after going all in on real estate for the past 3 years, and trying to build up my reserve again, and then trying to allocate more investments towards my 401k. Like I'm maxing out my 401k this year, and build up my emergency reserve again back to about 150k. And once I hit that, then I'll start max funding my life insurance again, and focusing on my physical health again, and getting back in the shape I want. So it feels stagnant, like real estate wise, but like I'm still growing in other areas. But it's still weird to me because I was just so focused on real estate for the past like 3 years. So it's like confusing to me. I'm like, God, I wish I could make more moves, but like I'm just waiting for interest rates to drop, and I'm waiting for me to stabilize financially and to like build up some other investments again. So it's kind of like a nice pause, right? So it's a season of growth, and there's a season of stabilization and reevaluation, and then there'll be another season of growth whenever interest rates drop again. And by this point, I will have clarity on how to do that, because I'm gonna just pull out money, cash out refinance, or I can sell a single family home, 1031 exchange into another apartment complex, cash out refinance some of my apartments, and then continue to scale that way, slow and steady, right? And, like I said, definitely making that move to pay off this primary residence so that, if I, start to have kids and a family and don't want to work as much, then I could make that option or make that move for me and my fiance. So yeah, overall, sorry for the long rant. Just wanted to share the journey, but overall, like it really, when you hit to hit your goal, it's a little bit underwhelming. What really brought me the most fulfillment was just pushing myself to the limit. I said, like, I pushed myself to the limit. Like I saw what I redlined myself. I saw what I was capable of, and I learned a lot from it. I gained a lot of clarity from it. And then now, the next time I push myself to the limit, I hope to do it